Hi guys, good morning and welcome to Power Breakfast. I'm Pavitra Parekh. Those are all of the top stories that we're tracking for you this morning, and we have a lot to get to clearly. But first up, let's go through what's happening as far as the global markets go. We did get yet another weak session on Wall Street, and you're now seeing those losses being reflected in the Asian markets as well. So what's looking the worst this morning is the Korean markets. The Kospi index seeing cuts of around 1% right now. Hang Seng is down 0.25%. Taiwan at similar levels, around 0.3% lower. You also have the Straits index, which is around 0.8% in the red. So that one is looking a little bit weak. Do remember the Japanese markets are shut today on account of a holiday, so you don't have any rates coming through from Japan. But the rest of the markets definitely opening with some cuts. So let's also bring the SGX Nifty up for you, because that is indicating that we will get a negative start to trade for our own markets. We're currently 70 points lower on the SGX Nifty. So that's what's going on across the Asian markets. But let's also talk about the US now. Wall Street ended Thursday's trading session lower for the third straight day. So the Dow Jones was down over 100 points. The S&P 500 fell around 30 points at the close. And the NASDAQ composite saw cuts of 1.5%. Remember, we also got Accenture's earnings, and that did weigh on the IT pack. CNBC's Mike Santoli is here with a wrap of all of that action from Wall Street. Mike.
Investors aren't really sure which way to turn. That's what one prominent Wall Street strategist told me live on CNBC just before the end of today's trading. He sees signs the market is ready to rebound, but the Federal Reserve is making it clear it will keep raising interest rates. That's a negative for stocks. The Dow spent most of the day in negative territory, closing with a loss of about 1/3%. The S&P stayed in the red all day, ending down almost 1%. And the NASDAQ finished 1 1/3% lower. FedEx is raising rates by an average of 7% and cutting costs by more than $2 billion after its profits were slammed by weaker demand around the world for shipments. That weakness could be a warning sign a global recession is coming. That's the action from the U.S. market. Back to you in Mumbai.
Mike, thanks a lot for getting us all of that action from Wall Street. But let's also bring you some interesting opinion. This comes in from